This is shocking, ladies and gentlemen. I'm almost speechless, which says a lot for me because I can talk like no other. Holy guacamole, the US economy just added 353,000 jobs in January. Much better than expected. Emphasis on much. We were only expecting 185,000 job ads. Ladies and gentlemen, it does not stop there because last month's number, remember that even beat expectations, around 212,000 job ads. Well, that was revised 117,000 up. So now we're at 333,000 jobs that were added in December and 353,000 jobs that were added in January. Keep in mind, January historically is a weak period for job ads, and February. Because why? A lot of companies do seasonal hiring, October, November, December. They start adjusting to layoffs or what their business requires following the end of the holiday shopping season come January and February. In fact, the economy is just accelerating, and the gains to these jobs reports were broad-based, not just government jobs where a lot of people want to nitpick and say it's just the government that is keeping the jobs report so good. This is far from that. So if we actually take a look here, job growth was widespread the last month, led by professional and business services with 74,000 jobs. Other significant contributors included healthcare at 70,000, retail trade at 45,000, government at 36,000, social assistance at 30,000, and manufacturing, even manufacturing, came in at 23,000 job ads. Oh, and I forgot to mention November's jobs report number, non-farm payroll number, was also revised up to 182,000. 9,000 higher than the last estimate. This jobs report today fully confirms we're not getting a rate cut in March, and the odds of no rate cut in May are jumping as well. Now, Fed Jerome Powell on Wednesday, he was very clear on this. The economy can do well. The labor market can do well as long as we don't see inflation doing well. Now, historically, we have not seen inflation in the past 3-4 decades now, right? There's been very little inflation since the 80s, 70s, 80s. Well, I'll put it like this. Inflation typically does not go down as economic activity goes up. Now, we've been, again, in a period of kind of no inflation, good growth for a long time. But when you have inflation, it typically does not fall as the economy is reaccelerating. And you can make an argument that the economy is literally reaccelerating. And we're going to go into more depth on this in the next video, but there's obviously other Tesla specific news I want to get into that is also pretty important. But long story short, if inflation stalls out here, you may not even get a rate cut in 2024. Now, I know that is very early. I'm saying this very early. And I expect at least one rate cut in 2024, but the markets are way off sides here. Way off sides. If we're actually going into an expansion period in the economy and inflation stays roughly where it is, up or down, let's say 0.1, 0.2, 0.3% on a month-over-month PCE basis, you're not going to get rate cuts. 10-year Treasury yields are rising almost 19 basis points today. That is almost the equivalent of a rate hike. Now, this specifically hurts interest rate sensitive names, your small cap stocks, your mid cap stocks that are sensitive to interest rates, as well as Tesla, which is probably the most interest rate sensitive company there ever has been. 10-year Treasury yields directly correlate to affordability of getting a loan on a Tesla. 90% of Teslas are estimated to have loans on them. So if we see rates higher for longer, truly higher for longer. That's a little bit of a problem for Tesla, and that's a big problem for a lot of your small and mid-cap stocks. But what's really fascinating about this is the markets are still pricing in 5 rate cuts for 2024. Here you can see 1, 2, 3, 4, 5 rate cuts, which yesterday you were pricing in 6 rate cuts. So you have unpriced 1 rate cut from our markets. But there could be a lot more unpricing of rate cuts from here. Now, the next Fed meeting is going to be on March 20th. And we have 2 CPI reports. We have 2 non-farm payroll reports. We have basically 2 of everything from now until then. So the inflation outlook, the inflation reports that we get are going to be vitally important to our markets. Now, you might ask, why are stocks doing so well today? In fact, the average stock is not doing well today. The percentage of stocks above their 50-day moving average is collapsing as we currently speak, down 11.3% today. It's been a very long time since I've seen that. And putting 11% there kind of puts it into weird context. You went from 57% of stocks being above their 50-day moving average yesterday to 50% today. So 7% of the entire markets have now fallen under their 50-day moving average today. I guess that's probably a better way to put it. The average stock is doing exceptionally terrible today. But it appears as if Meta and Amazon save the markets. I did make a whole video on Meta and specifically Amazon earnings, how they were affecting the markets. Meta is up 21% currently. Amazon is up 8%. Amazon earnings were a lot less exciting than Meta. Obviously, you can see that reflected in the percentage gain today. Amazon just met expectations for AWS. They did raise the high end of the guidance. They lowered the low end of the guidance. So really, I don't even think Amazon should be up 8% right now, but markets do what markets want. Meta, on the other hand, killed it. Across the board, everything came in better than expected. They raised guidance. They issued a new 50-cent dividend. So Meta is now a dividend stock as well as a growth stock. They guided for like 25% growth, off the charts numbers. It was just a picture perfect report. And I'll tell you right now, if Meta and Amazon were down today, the markets would probably have a 2 to 3% down day across the board. But as you know, Tesla is no longer grouped into the Magnificent Seven stocks. Not because Jim Cramer says it's not, because it hasn't been for a long time. It hasn't been performing in line with other Magnificent Seven stocks that are literally at all-time highs as we are speaking. And Tesla is far, far from all-time highs. That's because Tesla continues to cut prices. Now, Tesla's stock is down almost 2% today. That's mainly because Tesla is an interest rate sensitive company. I don't think it has as much to do with the price cuts that we've seen in Canada overnight. We have 2 pieces of breaking news today for Tesla. Number 1 is Tesla has dropped the Model Y prices in China by up to 6.9% or 4,000 Canadian dollars. New starting prices for the Model Y rear-wheel drive is $54,000. The Model Y long range is $64,000, and the Model Y Performance seen no price change. So, is this a big deal? I think that's the important part. I think that's the part people care about. I don't think so. You don't see that many deliveries in Canada in general to see the numbers really be too affected by this. But I think this does raise investor concerns that you could also see a price cut coming in the US. Now, that would be a big deal. Besides last quarter, the US has consistently been the country in which Tesla does most of its business. So last quarter, it was officially China that seen more deliveries than the US. But as far as an actual selling point and pricing power and the average selling price, the US is where Tesla sells the vast majority of its Model S and X and presumably now the Cybertruck. The US, I would say, is still the most important market currently. Down the line, it will turn into China. But this is really just more fear of a larger price cut that would affect margins. Now, personally, at this point, I believe Tesla, if they are cutting prices, it's likely because prices are being offset somewhere else, whether it's lithium prices, cheaper manufacturing, less manufacturing, something is likely offsetting Tesla's cost to allow them to cut prices by $4,000 in Canada. And if we do indeed see a price cut in the US, it's likely because something else became cheaper. Again, the reason why Tesla is down 2% today is because we're not getting rate cuts anytime soon. And I think the sooner we realize that, probably the better off we're going to be. But unfortunately, that means we may see some larger downside in our markets because we're still expecting 5 rate cuts. And the more those get unpriced, the more downside we could see, especially in your average stocks. But unfortunately, rate cuts or rate hikes really doesn't affect your Magnificent Seven names that have a outweighed effect of the broader indexes. So that's why you're seeing the index is doing well today and your average stock is getting utterly obliterated. And what causes Magnificent Seven to get obliterated? I'm not exactly sure. The Wall Street Journal put out this article today that says Tesla recalls millions of vehicles over the latest safety flaw. Sawyer Merritt says the fact that increasing the font size of some warning icons by 5% is considered a recall is so dumb. It just results in misleading headlines like this and convinces some of the public that Teslas have tons of safety issues because they don't bother to read past the headline. 99% of Tesla's recalls in the US in 2023 were just over-the-air fixes. Tesla's physical recalls affected just 21,455 vehicles, or about 1% of the total. And it seems like, at least for Tesla, the algorithms are programmed around recalls as being negative. So anytime you see Tesla recalling vehicles, or if that is what is put in the headline instead of an over-the-air update, Tesla stock has tended to fall. The Model Y now officially qualifies for the $12,000 rebate in Quebec, up from $5,000 before. And now the Model Y, due to the Model Y price cuts, the new Model 3 and Model Y now have the exact same starting price in Canada. Tesla has reduced the APR for financing in the US, the first drop since earlier in 2023, for 72-month loans, and based on an excellent credit rating, that dropped from 6.59% to 6.49%, and for an 84-month loan, that dropped from 7.61% to 7.51%. That is likely because the 10-year treasury has fallen recently, and it's fallen quite a bit from where you were in 2023, at one point hitting a high of about 5%, currently at 4.02%. Again, a lot of your lending revolves around 10-year treasury yields. But after today's increase of currently about 17 basis points on the 10-year treasury, I'm not expecting any further reductions to the APY. Tesla has officially settled the California hazardous waste lawsuit that we discussed in the video yesterday with a $1.5 million fine. And we actually have some really good news as well today. Tesla has announced that Giga Berlin built 6,000 Model Ys in 1 week, a new record high. The Kobisi letter on X says, which is kind of mind-blowing, the Magnificent Seven have now added a combined $3 trillion in market cap in 2024. That is even accounting for Tesla's $200 billion loss in market cap for 2024 so far. Literally, without the Magnificent Seven, this market is nothing. Those are not my words necessarily. They are from Bloomberg, that says without the Magnificent Seven, returns are not much of anything. And you can see here in the black line is the Bloomberg Magnificent Seven index, which is insane. And then the S&P 500 excluding Magnificent Seven, which is really hasn't been doing much. And if you look at an equal weighted index, it's even worse. The S&P 500 equal weight index is year to date literally flat, and the SPY is up 4.55%. The equal weighted NASDAQ 100 is up 3.21% so far in 2024. And the triple Qs, which are not equal weighted, is up 6.6% so far in 2024, which it does appear to me that this disparity may continue to grow, where your biggest of the biggest companies are doing very well and your average stocks are not, because your average stocks, they need more money to come back into our markets. A PayPal, a Fubo, a SoFi, all of these other companies that you may or may not invest in that are trading at multi-year lows. Let's be honest, PayPal went from $300 to $62. What happened? Nothing. Their businesses have been growing, been doing just fine. There isn't a lot of money in our markets. There's $6.2 trillion sitting in money market funds. That money's not coming back into our markets as quickly as it would if the Fed was actually cutting rates. Whereas the Magnificent Seven stocks are pooling all of the money because they continue to show impressive numbers and just become more and more inflated on a valuation basis, which does hold up your broader indexes. But really under the surface, as you can see today, your average stock is doing very poorly. Now, Tesla's stock today is actually seeing some decent option activity across the board. You have 575 orders from hedge funds and institutions, totaling $152 million with a positive order value of 58%. If you take a look at today's expiration, you have volume today of 55.27% to the call side and 44.74% of volume to the put side. So it looks like the call activity, the bullish activity, is winning today, even though Tesla stock is down about 1.5% at the time of recording this video. Global inventory numbers for the Tesla lineup shows a slight uptick for the Model Y, but still an overall downtrend since pretty much late January. Around January 22nd, you've started to fall. And the Model X, S, and the Model 3 are pretty much the same as where they were. The only thing that's really changing here day by day is the Model Y. You're seeing some big fluctuations. Not exactly sure why, but maybe production has really cranked up for the Model Y. As that news we just went over, a new record was just set in Berlin for 6,000 Model Ys being produced in a single week. Google Trends data indicates a slight uptick for Model 3 search trend activity, Model X, and Cybertruck activity, whereas the Model Y is still at 34, so unchanged from yesterday. Tesla is now running 500 ads globally. This is up from the 400 they have been running for a while, and it appears like there's a lot of ads that are in Australia for the Powerwall and for solar, but also for the first time, it looks like there's some ads here in China. Actually, I think I'm wrong. I believe this is Japan. Let's see. I think, yeah. So it's Japan. There is 4 different variations of ads that Tesla is now running in Japan, and what you can see here, SUV Model Y. It looks like I don't exactly know what I'm reading, but quite a few different advertisements in Japan. Quite a few for the Model Y. It looks like potentially this one could be for the Model 3 or even the Model X. Not exactly sure. Maybe you guys can provide some clarity down below in the comment section, but that's kind of something that Tesla indicated that they were going to do on the earnings call, is try to advertise to different regions of the world that are less educated on Teslas. Like Elon specifically said, Japan is very uneducated on Teslas. The Japan culture really has no idea about Teslas, which is kind of remarkable because pretty much everywhere else does. The yield curve is inverting today. You're now inverted 33 basis points, which is actually good news. When you go positive is typically when you are heading into a recession or possibly already in a recession. It looks like we're not even close to a recession. If anything, the economy is expanding right now. And yeah, that is causing the yield curve to invert deeper. The Atlanta Fed GDP Now tracker now estimates real GDP for Q1 of 2024 at 4.2%. Yeah, that's insane. Taking a look at Tesla stock on StockTwits, you can see the sentiment is extremely bearish today at 3 out of 100. Message volume is a little bit higher than yesterday at 53. Yesterday's number was 51. The participation ratio is at 35. So definitely not the best looking numbers here. Perversely, that's usually when I like to be more constructive and try to look at things in a reasonable perspective, because if everyone's bearish, they're either right or wrong. Are people right to be bearish on Tesla right now? Or are they too bearish on Tesla right now? I personally think they're too bearish on Tesla right now. Means right now is probably a good buying opportunity. Tesla stock did hit a low today of about $182 per share. You were down over 3% at one point. Now you're only down 1.39%, and you're currently trading at $186.20 per share. Tesla stock remains oversold on the RSI with an RSI of 26.79. Typically, this does lead to a large rally. I get it why Tesla stock is so oversold, but I do think a lot of it is wrong. I don't think people are going to be right in continuing to keep Tesla this oversold. I do think people are going to be proven wrong, and I think Tesla will come out with higher EPS, better profitability, better margins, and ultimately not cut prices as much as some people think they will, potentially an even faster scaling of the Cybertruck, or even potentially a licensing deal for FSD later in this year. But that's obviously something we can only speculate on. If you take a look at the MACD is extremely negative as well. In my opinion, you likely hold support here as a bottom around 180 if Tesla does cut prices in the US, or in China for that matter. You could fall to about 170 pretty easily. I think that could be a pretty fast move overall. That's like a 9% drop from here. If things got really bad in the broader markets, then you could fall to about 150, but I still think that looks unlikely. So I think your risk to reward looks very favorable. If things go right this year, Tesla stock could hit new all-time highs. Tesla could pull a Meta, but they would have to really go right? If things went bad, Tesla stock falls to 150. That's a $36 drop from here. The increase could be $200+ per share. I think your risk to reward looks very attractive right now, and we'll talk about that more in the next video. TLT is down 2.33% today, and your dollar is up about 1%, which is a headwind to multinationals, which Tesla is grouped in that category. And gold is down about 1% today, but I think that's actually good. Gold overall still looks pretty bullish. I would like to see gold continue to fall from here, but we'll have to wait and see. Let me know what you think about all of this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.